Welcome. Happy Thursday. It is December 14th, if you can believe that. And that means tomorrow is halfway through December already. And it feels like a long time since we've done our last mini masterclass. But that's, I think, because we did it on the Tuesday before Thanksgiving. So here we are in December, and I have a full page to go over with you. I made sure to print my notes so that I wouldn't forget anything, because this is a very important topic for every single business owner out there. No matter what industry you're in, you can use this information. So I wanted to make sure I didn't miss anything. So today we're talking about end of year accounting, all the things that actually mean that your books are done for the year, what makes them closable, what makes them ready to give over to your tax preparer. And there's going to be probably some things that you may not have ever really realized that is part of an end of the year process, but it is. And hopefully you have either an accounting professional or an office manager or somebody that's helping you at the end of the year. If you're a solopreneur and you're doing this all by yourself, this is really important for you to make sure that you write this information down so you can always come back to our page and watch the replay if you're not able to take notes right now. But without any further ado, I will get to my long list of information. So the very, very first thing I put was reconciling all balance sheet accounts. And this is something I could probably spend an entire hour on itself. So many people don't realize. Hi, everyone. There's lots of you joining. Hello. Lots of people don't realize it's not just your checking and your savings and your credit cards that you have to reconcile. It's every single account on the balance sheet. So any of your payroll liabilities, for example, like child support or tax liens, those need to be reconciled, and they should be all year long. Really, honestly, all of this stuff can be taking place all year long, but we're talking what makes your books actually close for the end of the year, and that is all balance sheet accounts are reconciled. So your payroll liabilities, your sales tax liabilities, any lines of credits, any loans, any cars, any mortgages, anything that's related to your business that's on the balance sheet has to be reconciled, as well as obviously your checking and your credit card and your savings account. Now, what reconciled means is that your books, so we're going to talk QuickBooks and in our land, your QuickBooks actually matches what the source document says is the accurate balance at the end of the year. So by December 31st. What is a source document? So a source document can be a statement. A source document can also be an online portal that you log into and you just look at what is my principal balance at the end of this year, or whatever, term it is, quarter, however they give you that information. So every time you make any kind of transaction in your books, it's reporting to one of your loans, one of your accounts, one of your checking accounts, one of your credit cards. And so you want to make sure that's all matching. If it's not matching, you need to investigate it. The only time that your balances are okay to not match are in the instance of a checking account where you might have outstanding checks out at the end of the year that haven't cleared. That will mean that your QuickBooks balance reflects differently than your bank statement, because the bank statement doesn't know that check is going to clear. So in that case, it's okay. Depending on the tax preparer that you have, some people even suggest voiding all checks at the end of the year that have not cleared and then reissuing them effective January 1. Most businesses tend to be on a cash basis, which means it's actual money out of your bank and actual money received and nothing else. So if your check hasn't cleared, it technically isn't an expense of your company yet. It's going to be, it's going to be, but it isn't yet. So a lot of tax preparers will say, go ahead and void those checks in QuickBooks and reissue them effective January 1, and they will clear in the next period. And then your balances will actually match. So I can't stress enough, you need to go through every single account on your balance sheet. And I've seen balance sheets that have 100 different accounts on them, and I've seen balance sheets that have 2, a checking and a savings, or a checking and a credit card. So depending on your business, it might be a lot of work or it might take you no time at all. If you haven't done the work all year to keep it up and you haven't reconciled every single month, that is going to take you a while, no matter how little accounts that you have, because you want to do it on a month by month basis. You don't want to do one bulk reconciliation. And the reason for that is, in an audit, you cannot prove that every single month that your records matched. And there's what they call force reconciling, which happens a lot, especially at the end of the year when people get frustrated and overwhelmed and they're just like, screw it. And they just say, fine, it all matches, and they force it. So be really careful and diligent about making sure your reconciliations are accurate. Now, speaking of that, uncleared transactions. It is very possible that throughout the year you've reconciled, right? So you're saying, yes, it matches, but then you have all these outstanding transactions that haven't cleared yet, that never hit the bank, that someone entered, but they didn't actually happen. All of those transactions need to be dealt with. Either delete or void, or like I said, void and reissue. Whatever the case is, you should not have any transactions left at the end of the year that have not been reconciled. So even if you're doing the work of going through and checking everything off, you've got to look at what hasn't been checked off and handle that somehow, some way. Now, if you're an accrual-based business, and you should know if you are, it'll be on your tax return, ask your accountant if you don't know, but if you're an accrual-based business, you can actually take expenses that you have not yet paid for, and you also can claim income that you have not yet earned. For example, if you have an invoice that's outstanding, you may be able to say that's part of this year's income, and you may be able to also say these checks that are outstanding are part of this year's expenses. So make sure you understand the difference if you're a cash-based business or an accrual-based business, so that you can make those decisions for your record keeping. Okay, going down the line, the next reconciliation that needs to happen is your payroll. So there is a form that every payroll company will have, whether you're at Gusto or Paychex or ADP or QBO. It's called the W-3. The W-3 is a summary of all of the wages and taxes paid on your behalf through your payroll system and reported to the government agencies, IRS, and your state. Your payroll on your balance or your profit and loss needs to match to what that report says. A lot of times, what happens is people write, let's say, a contractor or a vendor a check, and they put the description of payroll wages or just payroll as the category, because in their mind, they're paying them for a service rendered, they're paying them for hours worked, it's payroll. But what payroll actually means is ran through a payroll system, taxes paid on it to the IRS and to the state agencies, unemployment taxes deducted from it, employer taxes paid on those wages. It does not mean just a flat fee that you're paying somebody for working hourly. So be really careful about calling something payroll that you're not actually running through payroll. When people do this and they have real payroll, what will happen is your accounts and QuickBooks will start being commingled, because everything's just payroll, and you may have a different amount on your profit and loss than what is on that W-3, and you want to correct that or reconcile that. So you want to take anything and everything that's not actually running through a payroll system out of wages and put it where it belongs, like day labor or subcontracting or whatever the service was that you were paying for. So nothing in payroll that's not payroll. Okay. Next, are you making any last minute purchases? Do you need to make some last minute purchases? Hopefully all year long you're having a discussion with your tax preparer, you're doing some tax planning, and at the end of the year, if you have a big surplus of profit, you may be wanting to make some purchases for next year, some equipment or vehicles or things, or maybe, invest in some land or a building so that you can use part of that profit and invest at the same time. So make sure that you're capturing any and all of those last minute transactions. You need invoices. We need to post them as assets. And if you're taking out loans, the liabilities have to be created, all of that, so that your tax preparer doesn't have any surprises when they hand you a tax return or they're talking to you and you say, oh yeah, by the way, I did this, I did that. All of that should be on your books as of December 31st, if you in fact made the purchase in 2023. I think that's where we're at, 2023. My mind is already back in 22 from a project I'm doing, and also in 24. So it's kind of everywhere right now. Are you paying bonuses? Do you have all of that information to your payroll person? Do you have it written down? Do you know what the dates are? Make sure that you're, this is the time, if you are paying bonuses, to make sure that that information is going to where it needs to go. Speaking of that, this time of year, very important to verify your vendors and your employees' information. By verify, I mean, maybe you got a W-9 2 years ago from somebody. Maybe you got a W-4 from somebody 5 years ago. I know that people move. You know people have kids. Things happen. Life changes. Has their information actually been updated in your records? If it hasn't, update it for 2024, because you might need to do what's called a payroll correction for 2023 if the information was wrong. Also, you don't want the 1099s or the W-2s going to the wrong places. So are their addresses correct? Have they moved? Do they have a PO box and they've put their physical on the W-4? This happens a lot in rural areas where people have their mail has to go to a PO box, but their home is, what they put on the W-4, and then they don't get their W-2s. And then you have to listen to, I didn't get my W-2, or can you please print my W-2, or what happened to my W-2? And that puts a lot more work on either your accounting professional or yourself or whoever's handling that for you. So just make sure, verify all of that information is correct, or delegate that to somebody who can. Be careful if you're in an office environment, because, certain people aren't supposed to have access to payroll information. So that might be something that you shouldn't delegate in office, that you can do with your accounting professional or someone like that. If your vendors, same thing, I need an update with their addresses to get their 1099s, but all of these people should also have an email on file, because it's so easy now to e-file a 1099 or your W-2 and then just send it to them. All softwares have the ability to e-file and to send your respective vendor or employee their forms. So there's no reason you need to print and mail copies of anything. 10 times out of 10, your software provider will be automatically mailing those things out anyway. So if you're filing with QuickBooks, or if you're filing with Paychecks, they're already going to send those W-2s on your behalf. It's just if they don't get them because their address was wrong, then you'll probably have to be a middleman and deal with that. Vendor payments. I see a lot of the times where people write checks out to their vendors, but they don't actually put the vendor's name. They might put just subcontractors, or they might just put, especially if you pay through Venmo or PayPal or something, they just write Venmo in there and then they put subcontractors as the category. That is not going to allow you to verify that your 1099s are correct. You need to make sure that every check and every transaction that has cleared your account has a vendor name on it. And it's the real vendor that you paid, not a third-party system, not Venmo, not PayPal, not some random project name, but definitely the vendor that you paid. That's the only way you're going to be able to verify, by running reports, who qualifies for a 1099 so that you can issue those correctly and on time. So that's a segue into W-2s and 1099s are both due on January 31st. And by due, it's postmarked. So if you are mailing, you have until the 31st to put it in the mail, postmarked by the 31st. If you're emailing them, you can email them by the 31st. I would make sure that you get any kind of send receipt that is an option for you, because that way you can prove, if somebody comes back and says, I didn't get my thing on time, you can prove that you did send it. Because there are penalties and fines for not doing it on time if it ever comes up. Very rarely have I ever seen it happen, but there are. So just making sure that you realize that that deadline is approaching and you're verifying all the information associated with those two forms. If you are a cash-based business and you want to get money out of your account by December 31st so you can take that expense, I highly recommend you do it via wire transfer or ACH transfer or debit card, credit card, so that it's an actual expense of yours by December 31st. Writing checks and mailing out checks to a bunch of people to take the expenses at the end of the year, if you're a cash-based business, will not work. I've seen people kind of, shut their eyes, turn their head, and just ignore it and put it on there. And then I try to work with tax preparers that won't do things like that. So I also see it a lot that they say, nope, sorry, I can't allow these because it didn't actually clear the bank. So remember, cleared checks are the only ones that count as expenses in 2023. I've seen people at the end of the year have $100,000 in profit and go, guess what? I've got a bunch of bills to pay, and they pay them early. And that's fine as long as it clears your bank. Recording deferred revenue. So if you have ongoing projects that aren't closed in 2023, if you have deposits that you've received against unearned income, you do want to record those in a deferred revenue account so that you don't have to pay taxes this year on that money that you actually haven't earned yet. Because if you haven't performed the duties or the scope of work, it's technically a liability. Because if you actually don't end up performing those things for that client of yours, you have to give them their money back. So it's really a liability to you until the work is performed. So make sure you're looking at any kind of deposits or unperformed work that you've been paid for and move those into a deferred revenue account. Unless your tax preparer advises you otherwise, there may be some implications to that, so make sure you're checking on that. Did you make your estimates all year? So every single year when you pay your taxes, if you owe more than $1,000 for that tax year, the following year you have to make quarterly estimated taxes. It's not a I want to or maybe I will, it is a have to. And by have to, that means if you don't, you're penalized and you pay a fine for not having done so. So every quarter you were supposed to have made your estimated taxes. Sometimes people put those in the wrong types of accounts. They put them in an expense account. It is not an expense account. It is an asset account because this is money you're retaining towards a debt that you might owe in the future. Once you owe it, because your tax return is filed and now you know the number, then it turns over and it becomes a tax payment. So make sure those are recorded properly and that you have the documentation, because your tax preparer is going to ask you, did you make your estimated? When were they? How much were they? The last quarterly estimated tax payment for 2023 is actually due on January 15th. So again, these are end of the year deadlines, 1099s, W-2s, quarter four estimated taxes, all due in January. So you want to make sure you're on top of that. And then we'll move on from that. So those are the deadlines. Does your sales report match your paid invoices? I just did this for a client last night, and there's paid invoices, and supposedly they only make sales through invoicing, right? They don't do any other type of selling. They don't accept payments any other way than against an invoice. Their invoicing is $1 million less than their sales is showing in QuickBooks Online. Big isn't away. I don't know what happened. This is the second time that's happened to me on Instagram Live, and so I apologize. I'm going to go back to where I think everyone lost me. I hope you guys can rejoin whoever was watching, because obviously I went away. So I'm going to go back to point of sale systems. If you're using a third-party application like Clover, like Square, even other types of third parties that are sales, you want to make sure that you are reconciling those as well. Does the number in that system match the number that's in QuickBooks? Your invoicing. I was talking about a client I just recently did this for, and their invoices total $5 million, but the sales in QuickBooks is showing $6 million. So we've got to figure out where that extra $1 million came from and correct it. You don't want to overtax yourself on $1 million worth of income because you did something wrong in QuickBooks and the numbers aren't adding up. So making sure that your point of sale systems or third-party applications all actually reconcile and match with what QuickBooks says as well. Do you have distributions to pay out to your partners or officers, making sure that you've got that your corporate documents in play and that you know what you're supposed to pay and when. Changing payroll companies. This is the perfect time to change your payroll company if you are thinking about changing, because starting fresh January 1 will be super easy and you won't have to bring over any historical data. You'll be able just to cut and make a clean cut and start January 1. So starting those subscriptions, talking to your accounting professional, getting them all of the documentations they need, like the W-4s, the I-9s, pay rates, any deductions, any contributions, health insurance, 401ks, all of that. Speaking of 401ks, all companies now across in the country are supposed to be offering their employees a 401k plan. This was from the Secure Act of 2019, and it was actually extended, I think, a year or maybe 2 years. But as of this year, you're supposed to at least offer a qualified 401k plan. It does not mean you have to match, and it does not mean that your employees have to take advantage. You just have to be offering it. So make sure if you're not already doing that, you're putting that into place as well, so that there's no penalties for that. There are tax advantages for doing this, by the way, so it's probably a good move regardless. But the whole point of the Secure Act is to encourage people to invest and save for their future, because we just aren't really as a country anymore, not nearly like we used to. And it's going to have some terrible implications down the road if we don't kind of correct that and turn that around. Okay, changing minimum wage rates. That a lot of states change effective January 1, so making sure that you know in your state what those updates are going to be, and making sure that those changes are made in your payroll systems as of January 1. If you have a split pay period where half the pay period was in December and half the pay period is in January, you will have to split out that first paycheck with wages according to the December wages and the January wages. It's a little more work. It takes some, ticks and ties, but you do have to do that. So make sure you're doing that, or you're having the person doing payroll do that for you. Updating sick leave time. Now, I don't know of every state, but in California, effective January 1, they are mandating 5 days of sick time per year per employee, part-time or full-time. So right now it's 3 days, that's mandatory. In January, it becomes 5 days. So making sure that you're keeping up on those regulations and changing the policies accordingly inside your payroll. That leads into updating handbooks, policies, SOPs. Now's the perfect time to make sure when you get into 24, everything you wanted to update all year long, or everything that needed an update all year long, has been updated and your policies are effective. You should have your employees sign on the updates and make sure that's done as well. It's really hard to reprimand and discipline employees when you don't have existing policies in place, because you can't say, according to our company policy, you couldn't do this, or you were supposed to do that, or that wasn't allowed and you're breaking the policy. You can't do that if you don't have anything in place, which makes it very hard to discipline them. And you can, but in this day and age, employees have learned how to work the system so well, and between ChatGPT and Google, they can cry discrimination, they can cry this or that, and it's really hard for the employer to fight these things nowadays. So I just put everything in place that you need to in order to CYA in those instances. Set your end of year review with your accounting professional. Trust me, it doesn't get easier and easier to get a hold of them as you get farther and farther into tax season and first quarter. Get it in now. Even if you have to end up moving it, try to get something on the books now with your accounting professional to review your books after. I would say let them have January to get 1099s and payroll and all those things done. But get it on the books, because it's just not going to get easier. And the longer it takes you to confirm, that prolongs you being able to actually turn over the books to your tax preparer, in which case they may say, we can't do it now, you're going to have to file an extension. That being said, if you already know, like if you're listening to this and you're like, oh my God, it's like a crap show. I don't think I can say the SHIT word, so I'm going to say crap show. It's a crap show. I'm not ready. I'm not going to be ready. There's no way. I haven't done my books for 6 months or 8 months or 12 months or whatever it is. Just tell your tax preparer now, and then they can file an extension for you. They can get you off their list, off their plate for trying to fit you in by the deadline. You can get that relief of, okay, now I know I've got to work on this. I've got to get this done, but I'm not jammed up against a timeline. My tax preparer is not breathing down my throat about documents and forms. Do it now. If you know, because you know. If things aren't right and you're just like, there's no way this can be ready by February, just tell them now. They will love you for that, by the way, and they will be like, okay, great. Thank you for letting me know. Let me know when you get close to being done. uncategorized expenses. So a lot of people throw things they don't know how to categorize into uncategorized expense, or ask my accountant, or some sort of suspense account or holding tank for later. And I've seen it many, many times where later never happens. And at the end of the year, you have this gigantic amount in miscellaneous or uncategorized or ask my accountant or something like that. So you want to go through all of those transactions. If you have an account of any kind like that, go through it, audit it. You're going to have to decide now how to categorize those things. If you still don't know, maybe you ask your accounting professional, reach out to us. We're happy to always answer questions like that too. But you've got to get those things, because there is no such thing as miscellaneous on a tax return. There is no such thing as uncategorized. There is no such thing as ask my accountant. They will have to turn into distributions or owner's draws if you can't tell your tax preparer what they're for, because they are nothing then. They are not a legitimate business expense. And that's what the key is with your finances. So you've got to do something with them right now, or they're going to become income back to you, right? And you don't want that if they really are business expenses. That being said, I would audit also your distributions and your owner's draws. Make sure that they weren't supposed to have been some sort of business expense. I've seen it several times where things like Target or Walmart got put in distributions when really they were a business legitimate expense, but because there was no receipt, there was no way to verify if you got dog food or if you got office supplies or if you got materials of some sort. So it just got put in owner's draw, because that's what you have to do at the end of the year. So on both sides, make sure you have legitimate business expenses on the P&L, and make sure that your owner's draws actually don't have anything that you can take out of them and put back into your business. Now, if you do put something back, make sure you have the corresponding documentation, like a receipt or an invoice that proves how it was business related. Categorize Venmo and PayPal with their actual vendor names. Now, I hope you saw our post. If you're watching our post, you saw that the IRS once again extended the new regulation that requires Venmo and PayPal and third-party processors to issue 1099s, right? So that came off our plates this year. But it is still something that's happening in the future and that they're planning for, so get in the habit. Venmo is not a vendor. The person who you paid through Venmo is your vendor. So that's how you're going to categorize those transactions. If it's a business, if it's a personal, you put the person's name or the business's name that you paid, not Venmo, not PayPal. Those are just transaction facilitators. Those are not the vendor that you're actually paying. So make sure you're getting in that habit of properly classifying those transactions. Make any last minute retirement contributions, so you can take those deductions for the end of the year, but you also might want to update your retirement planning for next year with a financial management person. If you have never done that and you want to look into that, let us know. We have somebody we can refer you to, and she's amazing. So you can start taking advantage of some of those deductions and pre-tax savings as well. If you need a cleanup at this point, like I just said, tell your tax preparer, I'm not going to be ready. And I'm talking mostly S-Corp here, right? Because S-Corp is the March 15th deadline. And as of right now, there's no natural disasters. There's nothing that's causing an extension of the S-Corp deadline. So the intention is that it's March 15th. You really want to make sure that your books are clean and ready to go by February 1st if you have any chance of making that deadline. I know tax preparers who have already told their customers, if I don't have your books by January 10th, I'm going to file an extension, because I will probably not get to them because they're that busy. That is one of the beauties of having clean books, is that at the end of the year, it is as simple as doing these little last minute things, running your reports, and you're done and it's over with, and your tax preparer has no issue getting you in on time. If you don't have that situation, you really just want to be upfront and let them know. It happens to every single one of us, to every single business. I am a financial person, and I've had extensions almost every year that I've done this, because I do me last, right? I take care of all my customers first and I do mine last. So I can tell you it's very normal. It's not really the, preferred method, right? But if you are going to file extension, remember that extensions are an extension to file, not an extension to pay. So if you think you might owe, or if you owed last year, right, and your business is kind of maintained the same, or even improved, right? Because sometimes that's why we're not ready, because business just went, and then we didn't have time to focus on the back end things. And if you're trying to manage it all, which you shouldn't, you should be delegating. But if you are trying to manage it all, it's a lot, right? And I get that. So you should still make a payment on March 15th. If you think you're going to owe, know you're going to owe, or owed last year, because that will keep you from paying penalties and interest until you actually file your tax return, especially if your intention is to wait until September to file, right? Because sometimes that's just people's plan, even though, you know, it's not really the way to do it, but that's just how they do it. You will pay interest and penalties if you don't file some payment on March 15th. Now, if you owe $10,000 and you pay $5,000, you still will pay the interest and penalties on that remaining $5,000, but you won't on the original $5,000, okay? So I think that's it. I don't even know how I did on time. Oh, right on the dot. And I'm sorry about the little technical difficulty. I will once again try to combine these two videos. I think this happened last time or the time before, where my phone actually shut down that time. This time, Instagram just turned off and came back on. So thanks for those of you who rejoined. For those of you who didn't, I'm going to combine the two videos. I'll post it on our YouTube, but they'll both be here on our page as well. I appreciate you all sticking in through the technical difficulties or coming back and watching the replays. Our next mini masterclass is on, thank you. Our next mini masterclass is on the 28th. So we do the second and the fourth Thursday of every month. It's the 28th, and we're going to be talking about goal setting and action plans for 2024. So I hope you join us then, or send people our way if you know that they can use the subject matter. And everybody have a super Merry Christmas. And if you don't celebrate, have a wonderful rest of the winter season, the slowdown, the snow, wherever you're at. Just enjoy the loveliness of this time of year, and a Happy New Year to all. And we will see you on December 28th. Bye.